Hello guys, today we'll be doing illustration 7 of departmental accounts. Illustration 7. Mrs. Suman Enterprises has two departments, finished leather and shoes. Shoes are made by the firm itself out of the leather supplied by the leather department at its usual selling price. From the following figures, prepare departmental trading and P&L account for the year ended 31st March 2013. Opening stock of both the departments, purchases, sales transferred to shoe department, manufacturing expenses, selling expenses, rent and warehousing, stock as on 31st March 2013. Further information is available for necessary consideration. The stock in the shoe department may be considered as consisting of 75% of leather and 25% of other expenses. The finished leather department earned a gross profit at rupees 15% in 2011 and 12. General expenses of the business as whole amount to rupees 8,50,000. Now, first we'll understand the question and then solve the problem. As mentioned in the question, first we need to prepare the departmental trading and P&L account. Then afterwards we'll prepare a general P&L account. Here, why we are preparing the general P&L account is that we cannot distribute the unrealized profit in the departmental account. We can only do that in the why we are preparing general trading account is general P&L account is we cannot distribute the unrealized profit exactly in the departmental trading account. That's why we need to open general P&L account and list out the unrealized profits and what is the exact profit which is at the end of the year. Okay, this is the format for departmental trading account, trading and P&L account. First, particulars and both the departments and the total of that. Even on the credit side, particulars, finished leather, shoe, total, and you need to mention debit and credit for this. So first what we are doing is we are preparing trading account. Usually in the trading account, first item is opening stock. So just we'll enter opening stock to opening stock. So the finished leather is opening stock is 30 lakhs 20,000 and the shoe department is 4 lakhs 30,000 and the total is 34 lakhs 50,000. The next thing is purchases. Two purchases. Here it is 1 crore 50 lakhs. 1 crore 50 lakhs and the shoe department is 2 lakhs 60,000 and the total is 1 crore 52 lakhs 60,000. The next item is sales, by sales. Finished leather is 1 crore 80 lakhs and the shoe department is 45 lakhs 20,000 and the total is 2 crores 25 lakhs 20,000. The next item is transfer to shoe department. Whenever you get a particular adjustment like transfer from one department to another department, first say that if it is going, then from where it is going, which department is going. So always in the credit side, you need to write the going departments column. Okay. Write here 30 lakhs, 30 lakhs. To this, you need to write the opposite entry. That is to transfer from leather department, you are actually getting the product. So debit what comes in. Okay, debit what comes in. To shoe department it is coming, so debit that to shoe department 30 lakhs and write here in the total as 30 lakhs. Shoe department debit what comes in. Okay, And credit what goes out, from whom it is going, from whom it is going, from whom it is coming, from whom it is going. So we have manufacturing expenses, manufacturing expenses for only, I think it is only for the shoe department. So write here 5 lakhs, and in the total 5 lakhs. The next they have given us selling expenses and rent and warehousing. So all these expenses will come in P&L account. It does not come under trading account. Hence we will end up the trading account by entering the closing stock. By closing stock, the finished leather is 12 lakh 20,000 and the shoe department is 5 lakhs. The total is 17 lakh 20,000. Okay, this is done. Now we'll find the total and whether we get gross profit or gross loss. I think it will be a gross profit. Now we'll find the total and the profit, gross profit. Credit side is higher, 2 crores 22 lakhs 20,000, 50 lakhs 20,000, 2 crores 72 lakhs 40,000. Done. Now we got the profit. 2 gross profit, 42 lakhs, here 8 lakh 30,000, 50 lakh 30,000, and get this here by gross profit brought down 42 lakhs, 8 lakh 30,000, 50 lakh 30,000. Then write those two expenses, like two selling expenses 1 lakh 50,000, 60,000, 2 lakh 10,000. Two rent and warehouse 5 lakhs, 3 lakhs, 8 lakhs. Profit to net profit as a balancing figure, we get 35 lakhs 50,000, 4 lakhs 70,000, 40 lakhs 20,000. So we have prepared the trading and P&L account. Now we'll prepare the general P&L account. But before preparing the general P&L account, we need to find out the unrealized profit. Finished leather department has transferred raw materials to the shoe department. Okay, while transferring, it has transferred at selling price. The stock which the leather department has transferred to the shoes department, it includes some profit. So we need to take that amount of profit and we need to consider that as unrealized profit. And in one point, they have mentioned that the stock which is in the shoe department, it may be considered as 75% is from the leather department and remaining 25% is of the other expenses. So now in this 4 lakh 30,000, only 75% is the stock which is transferred from the finished leather department to the shoe department. What is the amount of profit which is added by the finished leather department to the shoes department? Do you know that? See, in this point, they have given that for the year 11 and 12, the gross profit percentage that finished leather department earned was 15%. So for the opening stock, we can take 15%, but not for the present stock, that is closing stock. For closing stock, we need to find out another gross profit percentage. So that we can calculate that profit on the closing stock which we are having and find out the unrealized profit. Find out that what is the actual stock which is sent by the finished leather department to the shoe department, and then proceed with the calculation of unrealized profit. So your stock refers to both opening and closing stock. First we'll see the opening stock. opening stock. Okay. So opening stock is 4,30,000 of the shoe department. In this, 75% is sent by the leather, 3,22,500. Now closing stock. 5 lakhs is the closing stock of the shoe department. In this, 75% is sent by the leather department. So that comes to 3,75,000. Now for opening stock, we'll take the past gross profit percentage and multiply with this amount. For closing stock, we need present gross profit percentage. So to find out that present gross profit percentage, here it is a formula. Gross profit is equal to gross profit divided by sales into 100. So here you need to be cautious while taking the gross profit. You're finding the gross profit percentage of the finished leather department. You need to take only the gross profit of finished leather department, that is 42 lakhs divided by sales. Here is the main point, like you have the sales of 1 crore 80 lakhs, yes or no? And this is the sale which you have made outside, but some of the raw materials, some of the leather has been transferred to the shoe department, even that is considered as a sale. So you need to add that also. It is there, like transfer to shoes department, you have sold 30 lakhs of 30 lakhs worth of goods to the shoe department, so you need to consider even this as a sale and write down here into 100. So there you get 20% as the gross profit ratio. So this 20% is for the year 2011 2012 to 13. So on the closing stock, you're going to multiply this percentage. Now opening stock, which we have calculated in the previous working note, is 3,22,500. The closing stock equals 3,75,000. Now to for opening stock, we will take the percentage of previous year. Why? Because in the previous year it was the closing stock, and that closing stock is the opening stock in this present year. So we need to take the previous gross profit ratio, that is 15%, which is mentioned in the question. For this you need to take the present gross profit ratio, that is 20%. So this is 48,375, and this will be 75,000. So the total unrealized profit is, in the opening stock you already have this. So what is the additional unrealized profit you need to take out from the net profit is 75,000 minus 48375, that is 26,625. Here once again I'll clearly explain you. In the opening stock it is already available, so this is the unrealized profit which you are already having it from the past year. And present year, it the from the closing balance it is showing that you need 75,000. So you're already having this 48,000. Still, how much is the amount of unrealized profit you need to recover from the net profit is this much. Understood? Now we'll draw the general P&L account. So write the total net profit which you have got by carried down, by net profit carried down is 40 lakhs 20,000. Write the general expenses to general expenses 8,50,000. So you may get the doubt from where this 8,50,000 has come, and even we mentioned that to rent and warehousing, to selling expenses, why we are not writing that here. See, in the question they have told it specifically that the general expenses of the business as a whole they have given. as a whole they have given, so only we are writing it here. And because of this only we are preparing, because of this point only we are preparing the general P&L account. So then write the to unrealized profit which we have worked out in the working note. Write the total amount, that 26,625. So take the total 3,000. So you get the net profit as a whole as a balancing figure. So that is 31 lakhs 43,375. So that's all about the question. I think you guys have understood it. Please subscribe to my channel because that keeps me motivated to do more videos and upload more videos consistently. Thank you guys. Bye bye.